Hello and welcome to the Trading Zone. Welcome back from vacation. Brian, how's it going?
Good. Nice, refreshing vitamin D plus from good old sunny South Florida. Always helps just sort of refresh, rejuvenate the system. So excited to be back. We got a great new year going on. Market's already off to a good start here. So we'll see if we can hold on to things. But we got a great show.
Yeah. Sure, it was super easy to get the kids back to school today, and everything's moving smoothly, right?
Yeah, well, that's always a slow start, but we get it going.
Yeah.
We'll get it going.
I know how that goes. Well, let's get into it. We're gonna let people trickle in here. We're just gonna talk about some fun events, and then we'll start the show as more people arrive in a couple minutes. By the way, just remember, we see all your comments. Anything you want to share with us, feel free. Throw them out there. We're happy to talk about that. Remember, Brian and I, former VIX options market makers. We were in the VIX pit from Brian was one of the first traders in the VIX pit. Actually, started a electronic market making group. We grew to the largest electronic market making group on the CBOE and had a wealth of knowledge doing that. We saw a lot of trades, a lot of money changing hands, a lot of risk being placed, a lot of risk being taken off, and we have a unique knowledge when it comes to volatility trading, to say the least. Absolutely. So, happy to talk about all of that as we go. We're going to be talking about NVIDIA later in the show. We're going to be trading NVIDIA, so make sure you stick around to the end of the show. But at the end of last year, Brian, people were saying NVIDIA is absolutely dead. I'm going to be pointing that chart out. It looked like it was head and shoulders top formation, a little bit of a rug pull. But there's, one trader that was saying, hey, I don't think, I lost it right here. I don't think it is going down like there, but if it does, a lot of people will be lining up to buy it. I don't know if you heard of that trader right there.
Yeah, that's a nice little article there by you, Joe, in Bloomberg, and a nice call. Obviously, hopefully some of our listeners or watchers check that out because it's been the right move. NVIDIA popping very hard today, and obviously people, obviously had some concern about Google and quantum computing, what that means for NVIDIA, and Qualcomm having their own chip and everything like that, and more competition coming towards NVIDIA, but clearly the love for NVIDIA is back.
Yeah, so also over the weekend, having some fun. We saw some football being played yesterday. Those Bears, Packers, they seem like same team right there. They're 1-5 in the NFC North, and there's one team above them all, Lions and Bears.
Yeah,
playing next week, but number one seed.
The hopes and dreams of the Bears winning the Super Bowl were slimming down this year, and my season was salvaged under two ways. Number one, I won my fantasy football league, big league, and in part because the other guy I played against had 3 Packers in his lineup, and they all choked 2 weeks ago. So that was just refreshing for me, and the fact that basically the Packers should have been over in the division besides a fingertip blocked field goal on the Bears. They could have very well been 0-6 in the division. So I think things are turning around. I love the way the season ended for the Bears. Yeah, we gave up maybe 3 slots on the draft pick. But, who knows if those guys pan out anyways. And to end on a good feeling, good note, I think the Bears carry it. Hey, they're undefeated in 2025.
Kind of just like an aside, just watching that game yesterday, there was a lot of experts out there that said, boy, so this is going to be a cincher for an over. The over was 52 for the Lions-Vikings, Brian. And it was easy money to go over. The Lions defense is toast. The Vikings are going to rack up some points. And it wasn't like, for me, I'm looking at the over, it's a high over, right? It's 52 is pretty high for the overs, but a high over is like 60, like really high. So it wasn't like crazy high. And it was just telling me this, something feels off here on this. Like, what do they really know? All these sort of quote unquote experts. I think Vegas has it right. They know the over. If it was going to be super high, they would have set it at 60. And if it was 60, they would have said, the experts would have said, oh, that's, too high or whatever, I'm not going over. But because it was kind of a normal over, the experts were all saying over, I was kind of saying something's wrong here. Maybe the Lions are going to be able to figure something out. So I think that just goes to show when you're thinking about these sports experts, which sometimes I watch some of these sports experts, I think they're similar to a lot of stock experts. I mean, no offense to some of the people that do these things. And I like to think that when I'm talking about the markets, I'm not making a full out prediction. I'm just saying, here's some probabilities. Here's what I see. I think that's a way you should kind of consider looking at stocks, looking at the market kind of similarly when you're hearing these projections, because nobody really knows. And in fact, the smart money, when everybody's got one same opinion, it's usually wrong.
Yeah, and I think we've been very good at being counter traders in the market. Naturally, skeptic is option traders. If you know other option traders, there's a sense of skepticism, maybe even conspiracy theory in them about things. Just looking at things as like, is this really the right way to look at it? And so, looking in the mirror and asking yourself, is there something off here? And then trying to take advantage of it. That's really been the key to our success as traders. And so, we'll continue to hope to offer that in this show. And I've mentioned it before, we're actually going to go live next week with our offering subscription agreement. People can subscribe, get our trade ideas directly to their email for a very low cost fee, and just sort of follow along with what they're doing and execute on their own. And so many of you are very good active traders, know how to get in and out of the market, but hopefully you take our trading suggestions and go along with it and our ideas, because we've had a lot of good calls in the past.
Yeah, I want to recap some of those at the end of the show where I had some good calls. I'm going to be re-upping them recently that you missed. Maybe you can talk about them and give me a pat on the back. So moving on, rest this week, just real quick recap, then we'll get into the show, the meat of the show here, Brian. We have a day off on Thursday. Sometimes that suppresses some volatility. Obviously, it makes sense. There's not one day less trading, so that needs to be accounted for. We're going to take a look at this just in our weekly preview. We got yields on the rise. The market's having a nice day in spite of that, but it's something we need to be following just closely, because this could cause stocks to take another look at these levels if yields continue to make these highs. And of course, another government around the world not collapsing, but we're seeing just some struggles around the world with a lot of these Western governments. I think people are just adapting. This is the new reality. They want to put people in that are going to play ball with the new administration in America, and they want good terms with the U.S. And the reality is the reality. So I think new people in place is going to be best for them.
It's amazing how much the global world falls in line with what the U.S. is, their policies, what they're doing, and start to follow suit with that. It's really uncanny. Shows the strength of the U.S. government, the U.S. innovation, the technology here in the U.S., the influence across the globe, the U.S. dollar itself. So all this plays a part, and people kind of just follow along.
Yeah, and they should. It makes sense. A lot of money's coming here. The best innovations are here. There's going to be a new administration with some friendly policies if you are a friend to the administration. So it makes sense to put the people in place that will do that. And speaking of the new administration, there are some tariffs that are coming. I think part of today's rally is there's some rumors, some talk about maybe the tariffs won't be as hefty as people had thought previously, but they are coming. They will affect the market. We're going to a couple of things very shortly. As soon as the new administration takes hold, we're going to have probably a new budget. We're going to be outlining that. The tax cuts will be re-implemented. So that'll maybe be a positive. These tariffs, I think people know about them. It's not an unknown, but the size of them is what's unknown. And I think that's going to be the push and pull that we're going to see with the market. Anyways, let's start the show. Let's get into it. I think we've got enough people here. Thanks everybody for tuning in again. Remember, we're here every Monday at 1. Welcome to the Trading Zone. I'm Joe Teagay, portfolio manager at Equity Armor Investments. With me is Brian Stutland. How you doing, Brian?
Great. Yeah, also portfolio manager here at Equity Armor Investments. Joe and I team up every week here, Monday, 1 p.m. Eastern, to give you not only our view on the market, our little macro view, but bring a trade idea to you and what's going on in the market, whether it's from the tech sector, a different sector that seems to be emerging or whatnot, and some earnings plays potentially coming up. Obviously, January earnings season, so we've got something here for you on that, but also review how our success has been, and look forward to a great show here with the markets rising early today, and we'll see if that can hold on.
Yeah, we got the markets rising. NVIDIA having a nice run up 4.75% right now. I was looking over at my screen. Just just fantastic. Sorry, I'm having trouble speaking. Just a fantastic start for NVIDIA. Last week, a little bit of slow start for the market. I think that made sense for people with short-term capital gains. Maybe they didn't want to sell at the end of the year. Carry those forward to the new year. More favorable tax treatment, hopefully, for those people looking to capture those gains the first year. A little bit of selling pressure, big buying pressure today, in spite of the fact that there are some headwinds we'll get into in a little bit. If you caught me on Friday, not a recommendation, but I think I'm patting myself on the back here. 3 big winners here. Great idea. Talking about this AI trade. I think this AI trade is going to continue. We're going to need power for these data centers. We're going to need more computers in these data centers. We're going to need software and data in the data centers, of course. That's why I chose those 3 names. Boy, are they off to a great start today. Again, market will be led by AI data, but also jobs data. Brian, we got a big jobs number coming Friday. This was me also in the news, just saying people were pessimistic at the end of last year, at the start of this year. I was just saying, hey, yeah, maybe the Fed's not going to cut, to 2%, but they are going to still cut this year. And the data still is pretty good. As long as the data is pretty good, the market's going to do pretty good.
Yeah, but also to the point, they might cut on the front end, but that doesn't mean the back end of the curve, the 10-year, the 30-year, those yields start to rise, and we get this re-steepening of the yield curve, which maybe at some point creates some volatility, as we've learned in the past, as those interest rates change, as the yield curve starts to steepen after being very flat or inverted. It's usually brought amongst it volatility in the marketplace, and I think that's why the VIX continues to sort of stay above this 15 level pretty consistently, rather than dropping down to something like a 10, given the amount of rally that we've seen in the market.
I think 15 is going to be the floor for this year, but we'll see. Yeah. Maybe it won't be. Also, early last year, Brian, did you hear about this prominent fund manager that said Palantir has 60% potential upside?
Yeah, somebody might have been talking about that at some point. That's obviously a stock we love. We bought it for clients in the portfolio at Equity Armor Investments, and it's a stock that I think is going to be a leadership. Obviously, it's taking a little hit today, down I think nearly about 5% actually, but it's a stock that's been very successful here. We still continue to own it for clients, whether using options to do so or flat out using long stock. It's a stock that is going to be a part of this AI play.
Yeah, the software component for sure. This week ahead, we have a day off, unusual day off. This will be the 3rd straight week with a midweek day off. That's also super unusual. But then after that, we get the jobs report. That's going to be monumental. It's going to set up the whole year, in my opinion. Are we still rocking and rolling in this economy? Is inflation, when it comes to wage growth, is that under control? We'll see. And then, of course, a little bit of data on Wednesday that I think it's just going to be like an appetizer for the jobs report on Friday.
Yeah, the jobs report is obviously something we've been watching, and we said, look, back at the end of the year, if the jobs unemployment rate started ticking higher, that would spell some trouble. It hasn't, which means maybe we're in that mid-90s, fun-loving interest rates, maybe not going as low as possible, back end of the curve going higher, but the economy is still pumping, and so stocks, back then moved significantly higher. We could be in that regime again.
Yeah, and we're here for it. Now, that's not to say we're not prepared for if it's at the end of the 90s, but if it's in the middle or early stages for it, that'll be obviously the best case scenario, which everyone's kind of hoping for. Here we have the skew, somewhat in the middle of our recent range here, Brian. We had relative low here, relative high here. It's kind of stuck in no man's land. Looks like it wants to kind of trend lower with the positive action, but still holding positively above this little mini low here. Not a huge direction here. Could go either way for me, but it's just something we're watching here. I think this kind of corresponds with like a 15 VIX in this area. This is kind of the area which I feel like is going to be hard to crack here to the downside. I think 15 will be kind of a floor in the VIX, this 4 area and the skew. I think it'll be a hard spot to get below, just because I feel like there's just a lot more uncertainty right now around the world. We don't have any of the new administration's policies in place. There's still some uncertainty there, so it seems prudent to me that that'll stay there.
Yeah, I like maybe starting to think about adding some volatility, added hedging somewhat if we see that skew drop and people get too overly bullish about owning calls on the upside and dumping their puts, which would leave the market a little susceptible to the downside. And look, we have Trump's going to take over January 20th. He's going to throw some policies out there at the beginning. People are going to react to that. And he's going to have a lot of pressure to get some things done in the first 100 days, as he's got Congress behind him. He's got obviously his policies lined up. And so if some of this starts to falter, there could be some, levels of volatility. And you're probably right. Like that 15 VIX level is something, if I see something below there, I want to own it. And when you look at this VIX term structure here, take a look at where we were a month or 2 months ago compared to where we were in a week. And right now, we're kind of in the middle of everything. To me, that seems like it's kind of fair value-ish right now. So I see VIX futures get a little bit lower. I'm probably looking to be a buyer of those.
By the way, just to kind of ignore this one. This is the election one that's kind of meaningless at this point. We were expecting volatility to come down. Of course, it has after the election. And this is exactly kind of the shape that we were predicting we'd see. Now, keep in mind, though, January also is a lower volatility month. It picks up in a big way in February into March. March actually is the most volatile month, surprisingly, of the year. I often thought it would be October. It actually happens to be March, so we should be expecting that. So it does kind of make sense to see, we got this a little bit steeper up here. So people are kind of pricing that in. We'll see how that plays out, but it already we're seeing a little bit of volatility, and I think these futures are reflecting that. And given that, we're kind of neutral, I think there should be some expected movement in these futures too. So there's some uncertainty in the futures pricing too.
Yeah, I mean, I think the one thing is I think a good unemployment report number, though, that probably brings that futures curve down towards where it was a month ago, as it looks to sort of mean revert. That would be the one thing that maybe if I was playing the market to the upside, I might want to short VIX futures as a way to do that, knowing that there's maybe some pressure from where it came from before.
Yeah, and interesting thought. Yeah, this very likely could come down here if there is a good result out of the jobs report. Basically something along the lines of, wages aren't spiraling out of control and the economy is still strong enough to sustain some job growth. I think that would be a good result. That's kind of what the market's hoping for. Speaking of the market, Brian, the S&P 500, I'm stubbornly holding on to this chart. I'm going to retire it. This will be the last time I'm going to put it out. This is now 2.5 years. I love this chart. We kind of riding this trend line higher. Maybe I might bring this trend line back a little bit later, but I think we're due just for some consolidation just in this area. It makes a lot of sense. Actually, you could extend that up here, if we do some consolidation here, kind of this 5,500 to this like 6,500 area bouncing in here. I think this growth, it doesn't have to be so high. I mean, maybe some of these 30 PEs that a lot of these AI names are getting are just going to be because people are expecting this growth. It's going to happen, and maybe we aren't going to have another 20% year in the S&P 500, but a 10% year, 12% year wouldn't be so terrible. I think people should be happy if that is what happens.
Yeah, if I had to make a call, I mean, I kind of view it as similar to maybe 2017, let's call it, when a year into when Trump became president before, where the market did rally nicely. The one caveat could be is that we get a little overextended because you're already talking about these Ps that are fairly high, although all these AI companies are growing into those numbers. And I'm sort of comfortable with those, but a little bit more of a rally. We may get a volatile pullback at some point here. Like I said, there's a lot that Trump needs to do when he gets into office, and any little hint of like that's not working out or that's not playing out is going to create some carpet shakeout, some volatility. So that's why I think we're seeing this level of 15 in the VIX. I do expect the market higher by the end of the year, but I think there will be some back and forth trading opportunities throughout the year.
Yeah, and I think the AI is kind of like extended, but they're extended in these really big names, which are making a lot of money. Microsoft, Google, Amazon, NVIDIA, Broadcom, Apple, Meta. These are big companies making a ton of money. They have a ton of cash. Yes, their PEs are mid-30s. Okay, that's high for them, but they're actually experimenting those gains. I think there's another potential leg higher in an AI rally, which is going to be some mergers, going to be some IPOs, going to be some new companies coming onto the scene, which we're not so sure about. I mean, Palantir might be one of them. They have a super high PE, but that's one. That's one company. I personally think they're justified. I think they have another company that's making a ton of money and with a lot of cash, by the way. But we're not seeing anything where we have speculation. We're not seeing companies with debt, companies with projections, negative earnings, which are fueling the rally. So that's kind of the next leg for me. Maybe it'll just take some time to mature. Maybe step one is building out the infrastructure, building the data centers, getting these set up for these step two software companies, which are going to be out there, which are going to be the next leg.
Yeah, all this is right. And by the way, full disclosure, all those names that you listed, we own all those names for clients at Equity Armor Investments, despite our own opinion liking those stocks.
So okay, well, let's move to the 1 year chart in the S&P 500. And I'll stick with this. We had this beautiful head and shoulders top. It didn't really materialize, and now we're bouncing up there. Haven't really cracked this level here. I'd love to see that for some health in the market. NASDAQ looks a little more precarious. We actually did make a lower low here, so that's a little troubling. So be watching this closely. I'd love to see this trend break. I'd love to see a higher high. Hasn't happened yet. Semiconductors, though, are promising to me. We're cracking up here, looking like we can crack through here. I'm hopeful that it happens in the short term. But here's one area. Actually, I have two area concerns coming up here, Brian. I have the 10-year yield, and it's just not great. It's climbing up here. It's pricey.
Yeah, and really, I mean, just if you could draw like a little trend line upward, right, from that low to that 420-ish level, it continues that sort of. We got like a nice channel that it continues to move higher. So there is no indication that all of a sudden yields are going to drop. I think it's going to take a significant slowdown in the economy for yields to really come back down, given a lot of the inflation data.
Yeah, and part of that could just be people pricing forward some more economic gains for the U.S. economy. And so maybe that's good news, but it's kind of give and take. So we got to take the good with the bad there. And maybe that's part of like that first chart I showed with the S&P 500. You should just be content with a 10% year. Every year doesn't have to be 25%.
Well, here's another thing on the yields too. Like I was thinking maybe I'd be a little bit more bullish about owning interest rates going that far out on the curve, but I'm no longer. I just think there's not a lot of value there, because I rather own a hedge to pay off than sit here trying to get ground away on yields continue to move higher. If the market moves higher, I'd rather own stocks and a hedge than I would use a hedge of some sort of 10-year bond or something like that.
So yeah, great point. It's tricky. I think it just kind of underlines so many of these assets are just going to need some risk control, going to need a little bit of expertise, but also just kind of like a longer term picture, because you might not go for one day the way you think. I think you kind of have a little bit of a longer term view on a lot of these things. Let's take a look at this. Crude, not great to me. terrible trend line. Sorry, but really breaking out here. Interesting to me, because I think part of it's the weather was really bad over the weekend. Had a lot of snow in a lot of areas which don't usually get it. Maybe the driving some of these natural gas prices spilling over into crude. But, we do have geopolitical concerns out there still. Absolutely. There are a lot of unsettled issues. And there's some uncertainty. There was some, the experts were saying, Trump's going to be take Russia's side and the war really quick, screw over Ukraine, yada, yada, yada. It's not looking like that right now. I think there's that narrative might be questioned. So there might be some unsettlement here. So we got two conflicts still going on: Gaza, Ukraine. A lot of oil in both of those regions. So this certainly is something we need to watch too, Brian.
Yeah, I mean, the crude is a tough buy, I think, right at this level. I do think, yes, there's geopolitical risk if oil shoots higher. I'm really looking more at like that top area, that 77 level, 77 and a half. If it breaks above there, then okay, I'd be worried that, now oil can move from like 65 to 77 and let's, call it 12 more points higher from there. So now you're looking at like, $90 a barrel. Then I start to worry that there's inflation back, there's problems. And whenever we see real huge spikes in oil, that usually creates a problem for the economy and negativity for the stock market. So those are levels I'm watching.
Yeah, and there should be some resistance here. We know this new administration is going to be favorable to production domestically. So there are things that are going to happen. The supply here should be increasing. Whether or not there's a decrease in the supply elsewhere around the world, which will have a big impact on the price, that's still a big uncertainty.
Sure. So anyways, you've been teasing NVIDIA for so long, Joe. Are we ready to get to that yet? Or are you
ready? I don't know. Are you ready? Let's talk about the trade of the day, Brian. Let's talk about NVIDIA. This is a chart we brought up before. We had this, kind of head and shoulders bottom. We talked about this. Look at this. Went from 138 to, under 100, 36% drop. I think that's exactly what the price target should be for me to the upside. But last week, look at this. This was a head and shoulders top formation, right? This sucked a lot of shorts in right here. Oh boy, was that painful? And then it just technically was just so beautiful to see it come back to this trend line and then be supported there and then take off. It was just really, I think a lot of traders who use technical really enjoyed this one. Just worked out really nicely for them.
So where does that 36% move take us with the stock on the upside then, Joe? Because I do like that technical analysis there and give traders maybe an idea. Maybe they can do some sort of option trade around that. Well, what do you see?
Takes us about to 175. Do you want me to skip ahead to our trade? I got a couple of recaps on a couple of weeks ago, but maybe I should just skip ahead to our NVIDIA trade because I think I've teased it long enough.
Yeah, I think people want to know what do you got for us on NVIDIA? Because I want to play this too.
All right. Well, I'm actually looking for some volatility in NVIDIA. We got that 150 area. I'm pretty sure I'm biased to the upside, of course, but I'm not certain that we have to go that way. Of course, there's earnings coming up. It's going to be at the end of February. It's going to actually be after the February options expiration. Brian, I actually want to do a trade that's going to end before then, believe it or not. I'm still going to be buying volatility, but the buy volatility after that is pretty expensive, as you might well expect. I got the target price here at 173. My target off of that head and shoulders bottom was about 175. Guess where I'm going here on my target trade. Now that said, I'm going to profit to the downside too. I'm actually looking at I'm sorry. I'm looking at selling a 125, 150, 175 call butterfly. I'm going to collect $9. I need it to I needed to move away from 150 here. Actually,
So let's recap on this trade here. So if you're selling a call fly, just for people maybe to walk them through, and disregard how that slide was set up there, but basically, if you're selling the 125 and the 175 calls, right?
Yeah.
But you're buying the 150 calls twice as much. You want it to move away from 150 towards the short strike, so you can make money on both sides of this trade. Typically, traders like to use this sort of play where they buy the middle strike twice as much. They sell the wings one time. That fly scenario is usually played when you're expecting a somewhat decent sized move in the stock, and you're worried about that move and participation. So this can be used as sort of an overlay to being long NVIDIA in some ways, where you actually get to double up to the upside, or you can stay protected somewhat on the downside. And so Joe is looking to make $9 here if it goes up through that 175 level and stays away from 150.
Yes. Break even, of course, 134 to downside. I need to be down below 134. Needed to be above 166 to the upside is my break even. This actually pairs with the rest of my trades, which I've put on here, Brian, too, a part of my portfolio. I think it's kind of all coming together for me. I have two other trades which I recently have done. This is 3 weeks ago. Bought into earnings. Broadcom had a fantastic earnings, blew out. I've been looking and watching this, looking for the right timing to roll it out. This is going to turn into a $35 trade once that 210 put expires worthless. So there's still $10 left in that put. So the trade's still almost $10 less than what it could be. So I'm going to roll that call up into a new call spread at some point. I'm watching that decay away. As you can see, it went to $22, but the stock went down 15 and only lost $2 in this trade. This would have been a good time to roll it maybe last week. But instead of doing that, I last week had on a semiconductors weekly vertical call spread. Actually, 2 weeks ago, I had it on. I didn't like the price action last week. I rolled it into a new week ahead. So net, I was in this trade for about $6 for both trades together. Today it's about $12.75. I'm gonna close that out today. Happy on that. But then that leads me into today's trade where I still have basically a short put down on the bottom there for NVIDIA. Just looking to collect some of that premium and wanted to just let myself have a little bit of long premium here. A short put on that Broadcom trade. Allow myself to have a little bit of option premium on the NVIDIA trade.
Yeah, and I think if you like these kind of trades, I think what's exciting, go to equityarmorinvestments.com next week. You'll be able to sign up for a subscription agreement to our Trading Zone weekly idea. And these are the kind of things that you'd get sent an email directly with simply the trade. If you have a Trader account, actually, you can literally click on that link, take you straight to your account, make the trade, boom, execute it. If you don't, you'll see the type of trade. You can go to whatever brokerage account you have and then go ahead and act on your behalf. But you'll simply get this information sent to you as we trade and update this, so it becomes very timely. And just think about it. You're walk away from your desk, boom, you get an email alert. You can click on the link, send the trade, not even think about things, or you can help manage it yourself. So it gives you some autonomy over the trade. But this is going to be a great way, and to me, a very inexpensive way to sort of get monitored. We're going to be offering these trade ideas for the low price of $29.99 a month. Or there's actually two other types of strategies that we're offering. You can get all three together for $49.99. That's a special that we're going to offer off the start here for people. So kind of exciting to have this. Again, you'll go and check equityarmorinvestments.com out to get more information about this. And again, starting with next week's trade idea, we should be live on this, Joe. So I'm excited about it to take your ideas, my ideas, and let people put them to use.
Yeah, absolutely. It's a lot of fun doing these shows. We're here. These are, just ideas out there, but just something we see. And remember, we're not saying this is exactly what's going to happen. We're just describing what we see and what the probabilities are, and then going from there.
Right. And again, this won't be necessarily, you don't have to be an investment advisory client necessarily, although we do take individual clients and manage their positions. So this type of signals aren't considered really investment advice, but just really trade signals that we're seeing. And whether you want to act on it, you can. Whether you don't have to. But this is a great insight, quick update on things that Joe and I have been successful in our trading careers on doing. So hopefully, we look forward to having you on that sense. But Joe, I think that kind of wraps up the show, right?
Yeah, I think that will do it for this week. We're here every Monday. Make sure you tune in at 1 Eastern. We love having you here. It's fun to talk about the markets, and I hope you have a great 2025.
Yeah, and subscribe with us here on our YouTube channel, Equity Armor, and we'll look forward to seeing you next Monday, 1 p.m. on the Trading Zone, sponsored by the MIAX, put on by Trade Your Hub. Thank you very much. We'll see you next week.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.